Indicators or anything to go by, we're looking at about a 250, maybe 300-point loss at the bell. The bell is wrong. We're off. We're running. 9:30 Eastern Time, and we're down 34 points, 55 points, etc., etc. Covering the opening of the market today, Ashley Webster, Jolyn Kent, Scott Shellady, and Jeff Sica. Scott, to you first. To you first, Scott. Did Janet Yellen have something to do with this big sell-off today?
Yeah, I think so. I mean, all it would have taken was for her to say, you know what? We're not going to talk about negative rates today, or even rate hikes today. If she just would have taken that off the table, not as far as the move maybe in March or whenever she thinks she might do it, but just merely giving those two things the thought. Higher rates and or negative rates, that kind of gave the market a little bit to worry about. Number two is that everybody said that it was mildly dovish. If you look at where the Dow was when she went on at 150 higher, and when she went off at only, say, 20 higher, and then we continue that after she left the stage, that was really the reason for the sell-off that started yesterday, maybe midday. So those two things, if she would have said so, would have taken them off the table as far as just talking about them, not whether she would do them or not, we would be in a much better place, yes.
Jeff Sica, I believe that Janet Yellen appears before the Senate today. Is that's yes. Correct? Yep. Is there anything that she could say that would stop the rot?
Well, here's what investors wanted. They wanted Janet Yellen to throw them a parachute.
Yep. More money, right?
Throw them a parachute. Show us that you have these tools. Remember, we've been hearing about these tools for quite a while. Show us that you have them. But what she showed us is a very delusional testimony, a very disconnected testimony, and what she showed us is that they are out of tools. So failing to throw the parachute to investors today, I think she's become so dependent on what the market does. I think she's going to gear a lot of what she says or doesn't say to what the market does, and that's what investors are going to be looking at.
And that's not what a Federal Reserve is supposed to do.
It is a tragedy.
Yeah.
For her to even venture into that realm is a disaster.
Ash.
Yeah, well, the statement apparently put out, because we get it ahead of time, identical to yesterday's. Today's in front of the Senate Banking Committee. She may change it based on what's going on. We shall see.
Okay, we're down 164 in the very early going. I want to start taking a look at the bank stocks, because earlier today, it was bank stocks in Europe that set off the rot. Some of those big names, like Societe Generale, for example, was down about 14%.
13% on SocGen. Barclays down 6%. Deutsche down 8%. Off 30 to 40% since the beginning of the year. Concerns about the strength of the European banks.
Well, look at this lot now. Those are big American banks. You're talking 3-4% down. Some of the biggest names on Wall Street, all of them down.
A couple of things on the banks, too. These are the European banks. We want to talk about the U.S. banks. Is that with the Fed perhaps not raising rates, that hurts banks. A lot of money went into banks at the end of last year believing that rates were going to go up, they were going to get more money on their loans. If the rate goes up 1%, that's more than $9 billion in extra money earned on loans for the banking sector as a whole. Think about that. So that's money. If there's no rate hike, they don't get those revenues.
Scott Shellady, come in, please. First thing this morning, I heard that in Sweden, if I give the government $100, lend the government $100, they pay me back $99.50. That's a negative interest rate. And I'm told that that's what happens throughout government bonds in Europe. Why is that bad news for banks?
Well, that's bad news for banks is because Ashley's right. They're not going to be making anything on their reserves, number one. And number two, Stuart, the 2-year in Switzerland, the 2-year is 100 basis points negative, okay? That's significant. That's what's got everybody scared here. And what's got more people more nervous is the fact that we have a Fed that is still thinking in 1950s economic terms. I mean, they're worried about 4.9% almost full employment. They're worried that this is going to be some sort of 1920s Germany with inflation running away. It ain't happening. That's the problem. So they're so far off sides. We've got Europe so negative, and the Fed is so clueless as to what's happening around them. That's what's got the investors nervous.
Okay, give you 20 seconds. What do you think Janet Yellen should do now?
She should come out today and say, we are not hiking rates anytime soon. We'll continue to be data dependent, and the U.S. economy is better than everybody else's, and our banks are fairly solid.
Okay. Bank stocks are a driver here in this sell-off. So, too, is oil. Look at it now. We were very close to $25 a barrel earlier this morning. If you could say we've stabilized at $26.95, okay, you can say it's stabilized, but that's still a very low level for the price of oil. It was $110 a barrel in 2014. 26 now. That has an impact on oil stocks, oil conglomerates, if you like. How about Exxon? Down some more today, $78 per share. How about Chevron? It's now at 82. It's down a bit more. Transocean, how about that? Down today, off not that much, but 2%. Again, 2% down. So, Marathon, that's down nearly 4%. $6. That's the range for Marathon. $6. Way down. All right, Scott, do you think we could hit $25 on oil today?
I'll tell you what, if we go through 26.50, Stuart, I looked at that on a chart before I came on, we could make a run at 25, yes, because that's a recent low, and I think that would be breaching the market. And right now, there's nothing to stop it. We're in a negative vortex loop going lower until we get something out that says production is going to be cut by OPEC or some sort of catastrophe in the Middle East. There's nothing else to stop this market right now except for the velocity of going lower is going to get less and less because we just can't go, to zero. So we're slowing down as we go lower, but 26.50, watch that level.
All right. Now we've got the Dow Jones average down 227 points. Yep. Come back in again, Jeff Sica, who was with us earlier on the show. You said we're going down some more to the 14,000 level, correct?
Yeah, I think ultimately we're gonna have a lot of volatility, but I anticipate around the 14,200 level that we're going to see. But keep in mind, like I said in the last segment, I believe don't underestimate the desperation of this Fed that has been so attached to what the markets have been doing that they won't initiate something truly desperate and in the end truly stupid.
But if it's seen as desperate and stupid, market goes down some more.
That's the whole thing, credibility.
Yeah.
The credibility is very much at stake. If Janet Yellen decides to change course at a whim because of a few hundred points or even a few thousand points down in the market, she has no conviction. She is just going with the wind and creating a vulnerability that is going to be very hard to get through.
Let me look on the bright side for one moment. And there is a bright side here. I'm particularly prone to bright sides, actually. The price of oil is down. Yes, got it. How about the price of gas? That keeps on falling. Who would have thought a year ago that we would be on this show in mid-February talking about $1.70 as the national average?
And it's going down, Stuart. In fact, we were just saying that Oklahoma, lowest average in the country at $1.35. 6 or 7 locations in Oklahoma selling gas now for $1.07. Couple of Sam's Clubs, 7-Eleven. It's going down.
Okay.
And I saw 99 cents in Kansas on Twitter yesterday through Gas Buddy, and a lot of retweets and excitement there for that. 99 cents a gallon.
That's coming. I would have thought if you've got a move like this, sooner or later, it's going to be a bit more widespread than a couple of stations in Kansas.
99 cents.
99 cents a gallon. When I first came to America all those years ago,
was it 22 cents?
There were gas wars.
Yeah.
There were gas wars. 25 cents versus 23 cents a gallon. Oh, that's a long time ago.
I remember when it ticked up to triple digits. And you're like, what? This is new, and it's permanent.
We keep looking for bright spots. We've got some more for you. Not only the price of gas way down, how about this? We have bookings at Expedia much higher. That stock is up 7% in overall big-time down market. How about this? Cisco, better profits, and it's got a share buyback program. Cisco is up 8%. Strong sales at the shoe company, Skechers, it's up 7%. And there's more money coming in at TripAdvisor, and that is up 17%. Isn't that extraordinary? Big percentage losses almost across the board, but some of them are going straight up in good percentage terms. Big name tech stocks, though, here we go again. We're on the downside. Facebook is at 99, down $1. Google, that's, I should say, Alphabet, to get it right, 696, it's below 700. Microsoft is not way down, but it's below that $50 level. It's about, 1.5%. How about Amazon? I think it's still below 500. Yes, it is. 486 on Amazon. Not much of a loss today. Netflix, $88 a share. How about Apple? Are we breaching 90 yet? No, we're at 94 and it's up 9 cents. Rough start to the year for technology. Anybody going to argue with that, Sica? You talked it down. It's your fault.
Yeah, exactly.
Okay. Can I just throw up the price of gold, please? Because I want to bring in Jeff Sica on this. Yeah. The price of gold is, last time I checked, was up about $42, $43.
Yeah.
You say that that is the good, safe haven right now. You are advising your people to buy gold, right?
Yeah, and we've been away from gold for a while. Gold, I think, if they had an award for the most hated investment in the past couple of years, it certainly was gold.
A couple of decades.
No, I couldn't even mention gold in public without getting, without getting ridiculed. The bottom line with gold has been in this reverse correlation, different than the market. Market goes down, gold goes up. But I think what's going to happen with gold is the more turmoil and the more crisis you see in the banking sector, the more attractive gold becomes. In my belief, gold is used as a protest against central bank policies and also a concern about the stability of the banking sector. When you hear talk about what's going on at Deutsche Bank, and as I've said before, I've been immersed in these balance sheets. The institutions that hold our currency, when they come into question, people go to gold.
Oh, they're doing it now. You're up $43 on gold. Long time since we saw a gain like that one.